Sure. So one of the first things I will say, I have already opened Shawn's data, which is going to be the first one that we go over today. So this one here, I'm going to be saving because I believe he talked about wanting to have Sven. Would I prefer? Okay, yeah, I believe he requested that Sven covers his in what I read. So I'm going to do Shawn here. Now, I will say, one of the first things I noticed here, I pulled up his data, and right out the gate, my main thing that I would notice here is I think this is more of a psychological and an expectation issue for him than a data and trading issue, which is common for people that don't quite really have expectations laid out in front of them, or if you're spending too much time on the trading internet, you're gonna see people making a million RR and taking no stop losses because of course that's how trading really is. But we have a lot of BEs and SLs. He's not too happy with it, but you can clearly see a significant equity curve here. The one thing I will say is I think marginally we can see any tweaks to his data to try and improve his win rate. But overall, I don't think it's bad data whatsoever. I want to read this piece though. So, hey, coach has been backtesting a few months, feel a little bit dejected. Win rate isn't exactly the best, which we will go over. His win rate is actually really, really good. But I can go through 3 years of data and only take 20 trades or less. And so many break evens or losses, 4-hour strategy, and I was hoping I could have some guidance. So the one thing I will say is if he's referring to 3 years of data on many, many pairs, then of course 20 trades or less is not a lot. But 3 years of data in 20 trades or less on a single pair, perfectly normal. That's perfectly normal. So what I do think, Shawn has been around with us for a while, but I know he did take a little break for a while and then come back. I do think this is more likely an expectation issue that we're looking at here. So I don't know. Here we go. So he did have about 5 pairs here, it looks like. So pound JPY, Euro USD, Euro GBP, Euro NZD, and AUD JPY. So I think 6, if I counted correctly. But regardless, we're looking at about 108 trades on 6 pairs in 3 years, it looks like. So I would say that could be a little bit on the lower end, but not unreasonable. So I think on average, I've seen people roughly, 5 trades a year per pair is perfectly normal. So with 6 pairs, 30 times 3, it's definitely under or around that target. So I think that's perfectly normal. I do think, once again, circling back to that idea of expectations, he may just have an expectation of, significantly more trades or significantly greater time period, whatever it may be. But he only traded maybe 1/3, if not 1/4 of pairs here. So I would not be too hard on the specific data just yet. Now, the other thing to notice is his win rate, in my opinion, is fantastic. It's slightly lower than what I mentioned the break-even win rate should be, including break-even. Let's remove that and see what we're looking at here, which, in my opinion, great spot to be. As we know, anything above 26% is profitable. So he is profitable by a pretty significant margin. And then anything beyond 30%, my typical goal that I go with, let me move this over, make sure I don't miss questions just in case, but my typical goal that I talk about is if you're in this 30% range, your goal can maybe be to try and drag that win rate up just a minor bit up to that 34-36% range without break even, which I think is perfectly reasonable. But overall, I mean, the thing he's got to look at is this is a 19% gain on just 6 pairs. That's fantastic returns. You divide that by 3, you get what, 3.33% returns per year, which is small. Or sorry, 6.33% returns per year, which is small. But when you look at the fact that he's trading 1/4 of his pairs here, I think that's perfectly reasonable. And you don't necessarily know the proper equity curve of how it would have panned out if you only trade a little bit of pairs. So I think some more testing can be done. He did it in a good way. Something I've been seeing a lot lately is people will just take pound JPY or, for example, Euro USD and pound USD, and then just go and trade that for 10 years and then look at the data. In my opinion, and even Sven will tell you this, or Andre, it's not the proper way to backtest. You shouldn't be taking 2 pairs very highly correlated and just going and testing 10 years. You should be doing 1 year of many pairs. So I would even recommend that to him instead of doing what looks like 23, 22, 24. And even I thought I saw a little bit of 20, 25 in here. But instead of doing that, do all your pairs on 1 year. That would be like my beginner backtesting advice, is most pairs you can do on 1 year, and that's going to be a lot better for you data wise to replicate your equity curve in a live market. But it looks good overall. I really, I want to preface that before diving into it, that his win rate is already solid. Mentally, he may just be struggling with an expectation complex because, he mentions that too many break evens or stop losses, but what he's not really accounting for is that he's profitable, and highly profitable with a good win rate. So we'll start here. We'll take a look at some of these trades. And my main thing is, I always say this with good profitable data, take everything with a grain of salt. You're doing well already, so don't make any significant drastic changes. Your goal should be very minor things that can maybe help drag your win rate up to the intended level. So one thing, and typically, okay, this is definitely a very stretched out chart. It's tough to read here. But this is a break-even trade, very long one. What is he trading on for this type of picture? This must be like a ultra wide monitor or something for the resolution. But yeah, the trade doesn't look bad. I'll skip through some of these and kind of get an idea of them. So I want to see, okay, so he has his stop loss here, so this should be a break-even position. It's just drawn a little bit weird on the chart, it looks like. Let me double check that. No, so it's labeled as a stop loss. Let's see here. Not quite sure how this wouldn't be a break-even. So honestly, one thing I could be looking at right now is possibly an issue regarding the way he marks up trades or sets orders, because if you did set this trade after the break of structure, liquidity sweep, and use this as your overall high, you should have tapped in here and gotten a break even on the position. So we'll keep an eye out for that, because obviously that's going to gravely hurt your data if you are incorrectly marking up trades and ranges, and especially the way you set orders. So we'll keep an eye out for that. But let's keep going through some of these. Okay. Yeah, so one thing I think that can make it easier for him is, instead of drawing your stop loss and entry over here, it should be, closer to where you get tapped in. It's a little bit cleaner for you to see, but I like the sweep on liquidity here. I like the break of structure. A little bit weak on the break of structure, but not bad. And then we do have a fair value gap around the entry. We kind of get this crazy news candle here, but overall not bad for the position there. We'll keep going through some of these. This one, kind of a similar scenario. One thing I think that he could, so far, I've only looked at a few. I'll wait a little bit to see. Just want to get a better understanding of, what we're looking at here before. Yeah, that's just a rough loss. Nothing wrong with that one. I would recommend, dragging his screen a little bit more, because having it very minute like this, it's very difficult to kind of distinguish your liquidity points and your sweeps on liquidity. You can't really tell. This here almost looks like equal lows. When you drag it out, you can clearly see it was a good sweep on liquidity. Things like that will be visually much easier if you kind of drag out your scale a little bit better here, especially with like this ultra wide monitor. Let's see. Another trade, not bad. Let me double check this, because this should also be a break even. So if he's not logging it correctly, I think it was, yeah, so another stop loss. So I'm kind of curious here on what might be happening regarding the way he's marking up these trades. So it could either be an issue of he's not properly using the break-even rule, which, obviously we could see some BEs in here, so that's not the case. So I'm going to honestly say this is more likely a situation of, and then let me also make sure that it's not an issue just regarding the journal and how he's logging it. So it goes from 100 to 2080. So it could just be that this column is invalid now that I'm looking a little deeper into this, because 2100 to 2100 for a break even, 2080, 2140, 2120. It's kind of odd here. I'll definitely talk to him individually about what is going on there regarding the break evens and stop losses and stuff, but some of these stop losses should be break even positions. And I do think it would be so much easier for him to draw where the actual trade taps in, instead of kind of, it almost looks like he's market ordering into some odd position here that doesn't follow the plan. So I am going to recommend those two things to him to start. But overall, I mean, so far what I'm looking at doesn't look bad. I see some decent positions here. This one perfectly fine. So, you know, if he does go and watch this back, what I'm essentially saying is instead of drawing your entry from where, you know, this kind of odd area here, it should be drawn from where you're getting tapped into the trade, because that makes the most sense, because all of this price action here was not you in that position. Realistically speaking, this even looks like a winner. You should be setting the order after the rules are met, where we have the break of structure here, the fair value gap and whatnot. So your entry in this corner of the trade should be over here where you first get tapped into it, and then this would show the loss here. But other than that, it doesn't look too bad, and hopefully, you know, doing that maybe clears up a little bit of the confusion regarding the break evens that you've been looking at. But yeah, this one's a break even here, and honestly, another good trade too. So I'm not seeing too many issues regarding the actual setups, which is kind of, you know, fair considering the win rate we're seeing here is pretty solid. Another loss in this situation. And we'll go through some more here. Oops, let's look at some of the take profits. Yep, perfectly valid. Tough to see again. The only reason I know it's valid is because I actually took this trade live. But definitely tough to see. I don't know if I can like change the scale. Probably not after the fact. But I think you should mark out the criteria as well so that the fib is clear. I would agree. Definitely would help out with marking each piece of the plan. Of course, this is FX replay, so it's a little different. He's taking the picture right from there. But, you know, I always recommend on the actual trades marking out, you know, every piece to it. Definitely helps out. But this one, I took this trade live. It looks, this is kind of what I meant about the scale being dragged out. It's very tough to not see this as liquidity. But when you do look at it from a live market standpoint, you can very clearly see that this was a strong sweep on liquidity. This trade is in my journal. Where are we? Euro USD right here. So that's this trade that we're looking at, which you can see it's super different when you view it from this standpoint compared to what he's looking at here. So I definitely think, yeah, because this one and this one are the same trade. It's very tough to see. I only really spotted it because of the fact that I took it live, but I think that would definitely help regarding, you know, seeing the trades a little clearer. Let's go to stop loss here. There's another loss, not a bad one. Consolidated a bunch before that entry, didn't get the tap in, unfortunately, and then ran right through it. But yeah, not a bad trade at all. I do think one thing I might mention as of, you know, this point here is I think I would focus on, you know, maybe sticking with trend a little bit more. For some people that are newer to the strategy or kind of getting used to it, I always think staying on the side of trend is going to be better than not. And then if you get more data and you get more comfortable with it, you can begin going more counter trend and, you know, getting used to those positions as well. But I think most cases for people that are brand new to the strategy, they're going to find better luck sticking on that overall side of trend. Because you can kind of see, like, you know, we're moving bearish here. It breaks up. The first time it breaks up, he goes to the trade. I think this is a great one, though, regardless. But there was some other examples in here that may be better to show regarding that trend. None of these ones all look great to me. But even this one, for example, it's very internal zone in an overall bullish trend with a bullish break of structure. So you can see price just worked its way back in to mitigate this range here and then run the high. So kind of staying on the side of trend and on that side of the higher time frame structure if visible definitely can help out a little bit. And that would only, honestly, probably be one of my only recommendations regarding this set of data. I think the other thing would be, you know, his personal expectations. You know, considering this a bad set of data when you have very clear profit in a profitable equity curve, a win rate, you know, nearly as high as a coach's who backtested 1,000 trades, for example. You know, I do think it's an expectation issue if you come into this and really only kind of notice the losses and break evens that you might have took and ignore the fact that over the long term you were profitable. And then the other part of it is obviously I think more pairs would give you a better understanding of the overall equity curve here, but the trades look really good. I don't see any issues that kind of stand out. Let me see here. Let me grab a drink of water. Yeah, so this will be another break even. I'm curious how this one was marked as well, because that's another issue that we'll have to look into. Okay, so this one was marked properly as a break even. So yeah, because we did notice that some of these are marked as break evens when they were, or sorry, marked as stop loss when they were break even. This one here is a good break even as well. A little bit tougher on the range. It's a little bit sideways here. But I think overall the data set looks good. There's nothing that really stands out too much to me. I think my biggest thing would obviously be fixing up the, the way he draws his entries is very, very odd here, and it's tough to read. And it may be confusing even. The entry should always be when you get tapped into the trade, not really down at the low here. But this is a great trade as well. Another good one I'm seeing, a good win. So I don't see much that stands out to me. My biggest thing is marking it up correctly, making sure all your stop losses and break evens are properly marked, because obviously that'll adjust your win rate depending on how they're labeled here. And then the other part of it, I think, would just be maybe being a little bit more trend friendly. Some of the earlier trades we looked at were not this one, but so something like this here, we can very clearly see a bullish trend overall in the market, and then he went for the only short position that kind of popped up, and obviously it was a break even here, but you kind of end up getting bit for that. We could see very clearly the market's bullish, so staying on that side of trend can definitely help out and increase that win rate. And there was another couple that I did see like that I want to point out as well. This one's a rough one in general. I mean, that's some very sideways price, so I would try to avoid that, but let's see, where's some of these other ones? Yeah, but otherwise these trades look really good and the win rate's solid, so I would not be too hard on yourself regarding, the idea that you took a lot of break evens and stop losses. Now I can't find the positions I was talking about or looking for, but honestly they all look good. The ones that I did check out look good. So that's probably going to be my main review for this. I would recommend obviously finish up your testing by getting the majority of pairs instead of just a few here, because obviously when you trade live, you're accumulating 20 plus pairs into your equity curve and your data all at once, as opposed to just looking at how 6 pairs performed over the course of 3 years. It's a very minute snapshot compared to what the actual equity curve might look like, but don't be too hard on yourself about the losses here, because I mean, at the end of the day, you're profitable. I think that's the biggest thing to look for. Is some people mentally struggle with the idea of losses, but if you can look at the end of the day and see that you made almost 20% profit, you have a really good win rate here to start out, just building off of that and kind of doing some more of your pairs, some more testing here, and I see no problem with this data at all. I think the trades look great too. That'll be my review for him. I'll timestamp these, and maybe I'll share the webinar link in each section just so I know and can keep track of them. And then we have another Excel sheet here we're going to take a look at. Let's close this one up. So the thing about this one is he talked to me a little bit. He had a great set of testing, a not so great set of testing, followed by a great, fantastic one, followed by another not so great set of testing, which is a little odd here because I'm noticing right away some of this data. I mean, nearly a 50% win rate with no gain on 100 trades. Plenty of pairs here, so I think it looks good in that perspective. He got destroyed right out the gate. Let's also check. So this is including, so one of the main issues I'm going to spot here is when I delete this, there's going to be a significantly low amount of wins. Yep, and then you're right under that profitable level. So being, compared to his last set of data, let's see if we can actually pull his last one up. Right here. All right. So this was his last set of data here that we went over, which was obviously ridiculously good. I mean, you could see the increase in the win rate here. You could see this is even without the break even, crazy good win rate here. And I want to see what this is, Euro 2023, and then it looks like, sorry, so 2024 did not perform as well for him. So one of the main takeaways that I wrote for him as well in the last one, I thought his trades looked great. We're going to dive into these and kind of see what might the issue be here, because this is clearly a significant difference. And I will say sometimes people subconsciously change the way that they approach their testing. For example, they might do really well in a backtesting sheet in 2023 like this, and then in their head they kind of, change or shift direction. Maybe they saw a week of someone in the server talking about doing great while trading aggressive, so they take a lot more trades or take a lot less trades. So I'm going to look at the number of trades here and see if I can get an idea on it, because obviously they both have, this one only has 72, which doesn't make sense. It should be 100. But 101 on 1 pair, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we're looking at 12 pairs here over the course of a year for 100 trades. And then I'm curious to compare that to the worst set of data. Is this the one I just looked at, or maybe it was a different one? Or he just tested the exact same pairs? Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So around the same. I wouldn't say there's anything significant there. And for those of you that weren't following, all I was just doing is counting up the pairs, the time frame here, which is about a year, and trying to get an idea if he's keeping the same amount of trades per pair. But we'll take a look at some of these setups here. Which, nothing wrong with this one. Looks great to me. Let me get rid of his old data here so I don't mix it up. Should be this one. Don't save. Okay. Also another decent trade. Nothing wrong with that one. I just want to skip around, kind of get an idea of the positions before I draw any conclusion yet. Also not bad, but I am already kind of noticing one thing. We'll keep going. Okay, and now I think this would be, so right away, if you guys can maybe guess what I'm noticing, but almost every trade so far has been that one shift that's against the overall trend and the clear market direction, which obviously I kind of talked about it before. If you're going to stay on the side of trend, you're going to have better results overall. It's okay to take reversals, but if you have the tendency to almost seek them out, where we're seeing bearish breaks of structure and lower movement, but trying to take the one buy. We're seeing a bullish trend overall, trying to take the only sell. Seeing a very clearly bullish trend, but also trying to take the only sell. You can kind of see that the pattern here, and I think this one was a fine trade. But overall, what I'm stating is the idea of, he seems to be taking the only reversal trade and not really focusing on the actual flow of trend and where the market's going. Almost trying to fight against it compared to flowing with it. But this trade looks great to me. Nothing wrong with that one. Also a pretty good trade to me. That's just an unfortunate loss there. I think I might have even taken a similar trade. Also kind of falls right back into that scenario I talked about. Obviously it's a break even, but we could see a very bullish market here, and he's taking the only buy position that presents itself. Not a bad trade. I like that one. Also another break even. Wait a minute. Okay, this could be another scenario. If I don't see how this could be a stop loss. It hit break even 2 separate times. I don't know. Yeah, so it was logged as a loss. Actually, was it logged as a negative 3% loss? He went from no, okay. The TP here to the negative 1% loss. Yeah, so it was logged as a loss. So I'm definitely going to circle back to kind of what I said about Shawn. Be careful here with your data collection, because I mean, this is definitely a double break even. We hit break even here. We came back up and in, hit break even a second time, and then he still managed to take a loss here. So definitely just keep an eye out for how you're setting your stop loss level and your break even, because that's obviously important and going to make a big change here. This one's also a break even level, but if you guys can kind of notice once again what I talked about, could it be that he enters a trade after it hit 1-to-1 because of FOMO? If that's the case, I would definitely say that that's an issue that should be cut down before testing. If you're going to back test, you need to be following the plan. There shouldn't be emotion involved here, because this is obviously, back testing. Emotion should be saved for the live charts and work on it then. But if you're back testing, your goal is to simply follow the trading plan. I would not allow any type of FOMO into your back testing, or honestly, in my opinion, the results become null. There's no significant conclusion that you can draw from back testing if there was not the plan completely traded as it should be. And then this here was not a bad trade, but kind of like what I was saying before. We're seeing a very bearish market overall, and then he goes for the only buy position that's available, which is definitely kind of a trend I'm noticing is he's going against the trend on almost a majority of the losses I've looked at. We can kind of see it again here. We have a very bearish trend, and he takes the only reversal. It's not that I don't necessarily think these trades are bad. I think they're valid. But the key here is if you're struggling with your data, staying on the side of trend is going to favor you every single time. And I noticed that almost all his losses in this scenario are against the trend, fighting the trend overall. So let's see here. We'll take a look at some more. Not a bad trade. This one's a little bit more on the side of trend here. A little bit more on the opposite side of trend here. We have the bullish market, and he's taking the one bearish shift here again. So I think that's a big thing. It seems like he almost, and it's possible because I've seen it before, but some people have the mindset or just the visual feeling that in order to catch a good trade, it needs to be the high or the low of the market and the top or bottom instead of just flowing with the trend. Some people are just more keen to seeing reversals and trying to take them, which is kind of like what I feel like I'm seeing occur here, is kind of just a lot of counter to the trend trades. And also I just want to make sure that, you know, he's logging everything correctly, because in my opinion too, if data is, you know, break evens are being logged as stop losses, it's going to destroy your data as well, obviously. And that's just simply a data issue, not even a trading issue, which is something we want to prevent, of course. This one's a good trade, nothing bad with that. It's another break even. Yep, looks good to me. A lot of liquidity at the low, but looks like a good trade overall. I'm going to check some more stop losses and see if they are all logged properly. Which, yeah, this one's logged good. I like that we're following the bearish trend this time. Good fair value gap around the entry. Break a structure down. That's a good solid trade. Because, yeah, once I get to a point where, and then once again, I think we are kind of going counter to the, the overall bias here. I have in my rules specifically to avoid clear reversals rather than follow trend. For me, having follow trend in my plan where trend may not be obvious causes me to make it too complex. Yeah, I mean, that's fine. Taking them all. So I'm taking them all, but avoiding the very clear reversal ones. I'm not too sure what you mean by avoiding like the clear reversal ones. I feel like the clear reversals you'd want to take compared to, or are you saying that some of the ones being shown? Gotcha. Okay. I see what you're saying. Yeah, for me, I mean, if I can't see a clear trend, I'm fine with kind of taking the position because I understand my edge on the data. Like, you know, if this one you don't really consider a good trend, for me, I'm still okay to take the position overall. But I'm saying more also along those lines for someone with struggling data. I think staying on the side of trend is definitely going to help out, especially when it's very clear. It's a great trade. Nothing wrong with this one. For me, if it's a big reversal, I just wait for the continuation. That's fair too. Also, not a bad trade, a break even here. Let me double check that. Okay, so he had it logged as break even. Yeah, so that's one thing that's tough for me is when I see a stop loss that was logged as a break even, it makes me automatically start, you know, feeling like the rest of this data could be just simply inputted incorrectly, which obviously causes a whole headache for everyone. You know, even him with the results that he's looking at, they might not even be the true representation. Another good trade here. Fair value gap, break a structure, following the trend. So yeah, I think the trades overall don't look bad. I think my biggest thing is, once again, we're seeing it here. So we have this very clear just continuation bearish, and he goes for the only reversal that kind of occurred here. And, you know, it's one thing if it was a few different scenarios, but if it's something that's detrimentally hurting your data like this, I always recommend taking the position with trend. So a good example here is I myself took this position, the buy position, and even sent something in the chat referencing why I think, before it even played out too, mind you, this was like when it got tapped into, I said I typically don't take these positions, consider it human error, whatever you want. But the idea was, you know, going for that first reversal for no real reason when we have a bearish trend. I think Andre actually caught the short here, I believe, on pound JPY, which is a good trade. But yeah, going for, you know, the first reversal when we have a clear trend in the market, I always find just kind of hurts more than helps for data, especially with those that are kind of struggling with their data overall as well. I hope there's not too significant of a logging issue here too, because I would hate to see that. Yeah, this is another example of that. So we have a very bullish market, just higher highs and higher lows, crawling all the way up, and he goes for that one short position against the trend again. I think that's going to be my on. It almost seems like every loss I've seen on this chart here compared to winners are all the trades where he's trying to catch the top or bottom reversal. And I just think overall it's just going to hurt your data. I want to check some of the winners. Fantastic winner. Once again, we're going with that trend. Great sweep on liquidity, break a structure, fair value gap, taps in. Great trade there. Let's look at some more TPs. Also with the trend again. So yeah, I think that's going to be my biggest takeaway. Before I go too deep into it, I think overall, you know, you're in a good spot, but for whatever reason, you seem to go for a lot more reversals in this situation than the previous one. We looked at a bunch of losses and all of them were attempted reversal trades, when the only few winners that I've pulled up so far have all been pro trend and solid trades. We'll take a look at another one to see here. I mean, obviously this is the situation flawless where I would say, you know, there isn't really a clear trend, so I would just take the trade regardless, just based on the rules. I would never really sit out of a trade if I couldn't see some clear trend or some clear structure. It's mostly just for the people that I find are struggling with data specifically, because you know, we did just go through a ton of trades here that were all reversals, and I think that's where the issue is at hand. And this one's also kind of an ugly range, but not a bad trade either. So yeah, I think that's going to be my main takeaway, is I would say try your best to avoid those reversals. Really focus on your trend where the market is moving. I think this type of trade is great here. We're clearly bullish. And then yeah, avoiding taking that one odd reversal out of, you know, a very clear trending and bullish market. And same goes for some of the other trades. So I think overall, though, the data is not awful. You're in a decent range. Similar to what I said for Shawn, I would recommend testing more pairs and kind of getting a bigger accumulation of data. But yeah, for that low of a win rate, you would no longer be profitable, considering your last set of data was highly profitable. I would always take those and compare the two, because, you know, your last set of data was, I think it was like a 36% win rate, great returns, same exact pairs. It was just a different year. But my takeaway would be, it looks like you kind of got more keen into this reversal style trading compared to that previous set of data that did you really well. Why was this just blinking? I don't know what that was. All right, so we'll hop on to the next one here. AJN, I believe you are next, which you're in the call, which is good. So let me, it's a PDF, interesting. Okay. So I've not seen a PDF format yet for, okay, I can still open the trades. That's all I really need. So a few things let's look at first. We have 114 total trades, 53 wins, 61 losses, 46% win rate, but a total gain of negative 16,000. So what that tells me is, more likely than not, a majority of these wins are break even. And let me just kind of do some basic math in my head. Yeah, so I'm not quite sure. The win rate would definitely be a little bit under, I believe, 25. It might be under, just based on the idea that majority of these are probably break-even positions for the winners and losers. The win rate isn't that bad, but there is a lot of break-even, so we'll take a look at some of these now. Let me check chat, just make sure. My bad. Oh, I mean, if you have the Excel, yeah, makes it a little cleaner to look at. We could do that. Let's let it load here. There we go. Actually, yeah, that looks nicer. It's the second one, copy of CAD JPY. Copy of CAD. Okay, this one here. So, yeah, and kind of like I said, if we take the, is this the same data sheet, or am I looking at, this one's definitely, first one was wrong. Okay, I was going to say, this one here is a really good data. This is a big difference here. So, take back what I said. This is great data here. That's the second one that got fixed and reviewed my data. Yeah. So I mean, that's fantastic return here. Great win rate. Your realized win rate, which is when you remove that break even level, of 44%. Huge win rate here. But we have, what is it? 68 total trades. Sorry, is that? That looks like 106 total. So maybe the win rate is skewed slightly. Because the total trades are fairly low here. Oh, I see why it's calculated differently. There we go, 106. So we have Euro Chef, NZD JPY, AUD CAD. So yeah, great amount of pairs here. Looks really good. And we'll take a look at some of the individual trades. Chart colors are interesting here. Good break-even trade though. Kind of like what we talked about. I love the sweep and the high volume of the candle. I love the fair value gap and the break. So this is a really good trade, and it's pro trend as well, following the trend nicely there. Let me get rid of this sheet here just so all right, take a look at some more. Not a bad trade either. Did come very close to entry here, didn't quite get the tap in and ran significantly. I'm also in the same boat as you. I don't really delete those. I know some people talk about they delete when it does something like this. I don't have data to support it, but you know, kind of yeah, inducement. It's a good way to look at it too. For me, it doesn't really matter. It's not that big of a deal because I'm profitable the way I do it. So, but if there's data that you know people present that they find it's better, they can obviously go with what they tested. This one here, so one thing I will recommend, I talked about the first trade here. I love the impulsive and strong high volume sweep here, so we could see the volume is key. I talk about this a lot with your highs and lows. If your stop loss is at a low where there's very high volume in a really good candle like this, you're in a lot safer of a spot than something like this, because this doesn't really truly show the institutional involvement. And I've said it actually in past webinars, if you don't see the liquidity, you are the liquidity. So there's a bunch of liquidity here, and I don't see a liquidity sweep. So then what ends up happening is not only does it come and grab that, well, obviously break even in this scenario, but not only does it come and grab that low, it then shoots very quickly right after, because this is where the majority of orders lie, is at the low here. Obviously, you got to break even in this case, so, you know, not the worst case scenario here, but just something I noticed. I would definitely recommend using higher volume areas for your stop loss. I don't know why it said verification. That was weird. Not a bad trade, following that trend nicely. Fair value gap, break a structure. Bit of an odd candle there, but let's go to next one. Also not a bad trade here. Another great trade in my opinion. Just really, you're really good at following the ranges, which is really the key here. I feel like just looking at the structure, this was your most previous break of structure to the downside. Some people might have tried to go for a long here when in reality, you know, we see the clear bearish trend, we see the great break of structure, and this is your high and this is your low. So that's a really good trade. Another really good example of that. Yeah, this is honestly some fantastic data, and the trades look great to me. So there's nothing here that stands out to me too much yet. My biggest recommendation is obviously, you know, continue your practicing, but introduce a live account if you have not already. Whether it's, you know, you want to start a $20 live account, you could start a demo account with a brokerage, you could start an evaluation, whatever it is. The general idea is the live market exposure, seeing the charts move and being able to kind of get used to the psychological factors of that, and really just mimicking this set of data the best you can in the live market. Because obviously it's kind of better to work both ends of the spectrum at once. Backtesting is great, but backtesting paired with demo testing is obviously a lot better. So that would be my next step, next recommendation there, is really working on, you know, the psychology side of things by introducing maybe an eval or a live account. But the other biggest thing is, you know, we'll keep looking through some trades here. These all look really good to me. But the other biggest end of the spectrum is if you have data that, you know, panned out this great, your goal is to really look at all these images, keep in mind what you were doing, how you were trading, sometimes even saving these in an image format so it's easier to pull up and see, like a Discord server or whatever, and saving the actual images. It gives you a better idea of the trades you were taking, what ended up working so well for you in this data. And if you ever find yourself struggling or in periods of drawdown, refer back to the data, look at the losing streaks that you had in some of these cases, and understand it's normal. For example, you know, we're seeing a huge long-term profitability here, but there is a 6 trade or 5 trade losing streak right here. It's perfectly normal. It's going to happen. So when you get to that point on a live account or a demo account, if you introduce that now, just be prepared for it and understand that it's, you know, it's part of the bigger picture. This type of situation, absolutely unreal when you, especially when you get to that live account and you see something like this occur. It is enormous for an equity curve. It's probably one thing I'm going to actually do now is I'm going to mark or label out your equity curve. So I'll take this, insert, let's do a line chart here. Let's drag this back to the top. just to visualize it. And then I will put it here. And then let's change the scale on this. There we go. Come on. There we go. And I mean, it doesn't get much better than that. You can see super, super clear profitability here. Ridiculously great return on the account. So I have nothing much to say other than, like I said, maybe introducing that demo account, getting used to that. But yeah, I mean, these trades all look great to me. The data looks great. You're really following trend nicely here. Another 14 pairs to test, of course. And, you know, that can adjust the data too. I would not be afraid if you start getting a lower win rate on the last 14 because the overall data here is really, really good. I think you're doing really well with these more aggressive ranges here. But the key is that every one of these that I've seen, number one, they follow every rule. You have the sweep, you have the fair value gap, you have the break with the candle close. But the second part is almost every single one of these aggressive ranges I'm seeing you do well with follow that trend. So keeping an eye on that trend, like this one, for example, you got the break even on, but you could see you're very clearly following the trend. There was some more, I might have deleted the images already, but there was some more that you had that were just very good at following that overall trend for the more aggressive ranges, and I think those work well. You can see it here as well. So yeah, not too much else regarding this data. This looks great. I would definitely recommend what I talked about with demo. Start introducing a demo account, get used to the psychological factors of this because, you know, it's a whole other area to kind of strengthen is the mental side of things when you're in a live account. But this is your, you know, this is your cheat sheet right here at the end of the day. You should be able to look back at this, look at the trades that you took, kind of get a better understanding of your data and your edge this way, understand the drawdown periods. Like you can see a pretty steep one here, another pretty steep one here, part of the trading, and even another one here. You know, these are all part of that longer term equity curve that delivered great profit. So mentally being able to kind of get used to withstanding that on a live account, be okay with it is the next important piece here. And I always say this, don't stop backtesting either. It's okay to still, you know, backtest on occasion. Live trading at the end of the day with this strategy takes 15 minutes a day. So you have plenty of time to backtest and continue working on that. And it'll help you strengthen both sides of things. Your backtesting will give you more practice and repetitions. Your live trading will work more on the psychology side of things and the mental fortitude for the live trading. But this looks great, honestly. The data looks amazing. Win rate is awesome here. And yeah, the equity curve is super, super clear. That'll be my takeaway on that one. Obviously you're in the call, so it's different, but I'll end up linking it anyways at the end of this. And then I do have one more set of data from, it looks like Leo here. Let's see what we got. So Leo is fairly newer too. He's talked to me before. He's not too confident in his testing, so I'm kind of glad we get to go over this one. What time is it? Yeah, we got plenty of time for this. So first thing I'm gonna do, oh, it's view only. Oops. Okay, that's fine. So I won't be able to. I was gonna plot an equity curve here, but what I'm seeing is about negative 20% gain here. Very, very low win rate actually in this scenario. But let me check here. Yeah, so that's including break evens with the win rate this low. So there's definitely going to be some major tweaks that I want to make here to the trades before even going into it too much. And let's take a look here. Okay, so the first thing I will say here is I think structure could use some improvement because number one, I've talked about it before, where you want significant volume at your high or your low, where you're placing your stop loss. And for some reason, he took this low and not the previous one that actually broke structure with the high volume. And you can actually see if he did take this low, he more likely than not would have tapped in and gotten a break even here before falling through. So following your most recent structure, your most recent trading range, that's the most important term you'll hear me say. I always say that a lot now. I know people have been saying, you know, Sven mentions it a lot in his later webinars. Most recent break of structure, that's kind of something I always focus on. This is a good trade. Nothing wrong with this one. I like that we're following the trend here. We see the sweep, the break, fair value gap down the low, and this is just a break-even position. Let me double check that that's logged correctly. It is. Keep going here. This one's not a bad trade either. A little bit ugly with the regarding the range, but not a bad trade. Also not a bad one. Okay, this one's a little bit iffy. It's not the cleanest. but I would not say this is a bad trade. It's just a little bit ugly there. I want to keep looking here and see before I draw any conclusions, kind of any patterns I notice out the gate. Okay, so this one's definitely a little bit rough. I would avoid these types of trades. We see not only no sweep liquidity here, the break of structure is very faint and very internal, and we don't really have a trend. So these are the situations where, in my opinion, I would just sit out of the market entirely, because we don't really have anything here. But my key, and one of the things I always tell people, is make sure you're marking up every piece to the strategy. I understand this is FX replay, so it's a little different. But if you go through like a little mini checklist, it takes 2 seconds in your head before the trade, but just go, okay, break a structure, check. Fair value gap, huge one, check. Liquidity sweep, and you might sit there and be like, okay, there's almost nothing here. And the break of structure is good, but does it have anything to do with, the major structure or trend or anything that's going on here? Not really. So this is a trade that I would avoid. Take a look at a TP here, and this one I would say is also not a valid trade. We got a stop loss kind of in no man's land regarding the range here. So I think this is, definitely not a valid trade. Your main goal has to be following the structural highs and lows. I think my biggest advice would be watching the structure course again, and maybe watching some structure videos. I have structure videos on YouTube, Sven does as well. Really diving into those, because from a market structure standpoint, this would just be in incorrect position. Not a bad trade either, but I talked about it a little bit before. If you don't see the liquidity, you might end up being the liquidity. There isn't really a liquidity sweep here, so I would avoid that position. This one isn't a bad trade, a little bit ugly as well. We're not seeing too much of what's going on there regarding trend, but keep going. This is a good trade, nothing wrong with that one. Also a good trade here. Little candlestick color change, it looks like. Let's see. Another candlestick color change. This one I would put into the ranging category. If I'm not really seeing a good trend here. It's just very sideways, breaking a high, breaking a low, breaking a low, breaking a high, all over the place, but not really moving anywhere. So I would avoid these types of positions. Sit out of consolidation areas. This is a great trade. Nothing wrong with that one. Also a pretty solid trade. So yeah, I mean, it definitely almost looks like, what I'm confused about here is it looks like a lot of these, okay, so break evens he just didn't include in general. I want to look at some of these TPs because they're very minimal here. And this is even kind of a rough one, in my opinion. Let me look at some of these take profits. Also a rough one. So I think the biggest thing here is I would consider missing winning trades to be a big issue here, but I think a lot of that is stemming down to and boiling from, number one, not really a good understanding of market structure. Definitely could improve with the market structure department, and that would definitely help you spot more of the trades properly. Because when I see very minimal winners and the winners don't look like something that I would necessarily take, the thing that's really standing out to me there is when you're on a live account and there's some psychological pressure, the only thing that you have to rely on when you're on that live account is the trading plan. If you're feeling pressured psychologically, you're maybe in a drawdown period, whatever it may be, you need to sit back and say, okay, I know liquidity sweep, break a structure, fair value gap, trend, whatever your little, checklist is in your head. That's what keeps you grounded and keeps you profitable in the live market. If I look at take profits and they don't necessarily have that, that's going to be a big issue, because when you're in that live market scenario, are you going to have that checklist to rely on, and is it going to necessarily work? And the answer is no, because if it doesn't really follow those rules, these trades aren't something that you're going to have the mental fortitude to go and take on a live market. Take a look at another one. This is a great take profit. Also a good take profit. So yeah, there's some good ones in here, but definitely some iffy ones, and I would try your best to avoid logging too many of those in your data set, because it's going to skew it. I think the biggest thing here, we'll look at some more stop losses, is going to be that market structure understanding, because even then, like, this isn't your high that broke the overall low. So the way that I personally mark my trades, and you'll see Sven and Andre do the same, is we have a liquidity sweep here. Let me just draw it out. This isn't necessarily a bad scenario. There was definitely some worse ones I saw in here, but when you see a sweep on liquidity, the highest point of that sweep on liquidity that then goes to break structure of the low. That's your range. You want to take from the high of this range to the low of the retracement, and that's where your trading range should always be drawn to. Now, this scenario, obviously, it's minor. You know, you can see it's not a big difference, but there was a lot of trades in there where I can see he didn't really have that understanding of the proper range to be utilizing. Not bad though overall. Let's keep looking through some of this. One's just kind of a rough scenario regarding ranging price action. So that would be one recommendation I have, is just avoid those ranges. That's a very simple implementation. If you don't really have a good idea on trend or what the market's doing, always avoiding it is the better option. But these types of positions, there's really no volume here. There's really not a range. And once again, goes back to that idea of market structure. If I were to try and mark out market structure here from the high that he took, it's really not valid. So focusing on valid market structure is going to be a huge one. I think you should watch the coursework on that again, or YouTube videos to go a little more in depth. I know me and Sven have some on there. And this would be another example of, you know, market structure not marking the proper high. The stop loss here is kind of in an odd area when realistically, once again, you should be at the overall high that broke the structural low. Let's keep looking through some of these here. This isn't a bad trade either. Little aggressive, also a little bit aggressive here as well. These aren't bad trades. They're just a little bit iffy compared to some of the clearer, because one thing here is this is 2024. I could tell you factually that I've taken plenty of very clean and clear trades on all of these pairs in 2024, and I'm not really seeing any clean or clear take profits here, which tells me not only is he taking some iffy winners or some very aggressive and ugly ranges for a lot of stop losses, but he's missing a vast majority of the winning trades that presented themselves this year. I believe I even took that pound JPY one, but yeah, I know there's a lot more take profits that occurred here that he may not have seen. Now let's just take a brief look. I might not go over 2023. I know he didn't ask for it. Okay, there's not enough data here to kind of make any conclusions, which is fine. But I just want to look at, yeah, 25% win rate, 16 total trades. So obviously nothing, but I do just want to briefly look at some of these. I don't know why my mouse does that on Google Sheets. It, like, when I click and then I'm not even really dragging, it gets like stuck. Okay, yeah, these trades aren't too bad either. I don't know if this is more recent testing. Yeah, see, it keeps clicking and dragging. It's weird. I don't know if this is more recent testing, but I definitely am seeing a lot better trades in this one already, just from what I've looked at. Obviously, it's a much smaller sample size. No conclusions are drawn yet, but just in general, from some of the trades I'm looking at, I don't see any scenarios that are too bad. Keeping in mind those fair value gaps, those cleaner ranges. So that would be my main takeaway here. We'll wrap it up after this one because we're getting close to the end here. But my big takeaway would be, number one, really getting better with market structure. I think there was a lack in some market structure ability here that's leading to not only taking some very ugly and iffy trades, but also missing out on plenty of winners. I think another thing that I would do is, I know he has my personal trading journal and I have 2024 logged in there. I realized this the other day, actually. I've been using this journal forever and it said the wrong years the whole time. So I'm going to change that while I remember. Okay, oops, 2043 this time. So, looking through, you know, it's just obviously the end piece of 2024 here. I had it all in separate documents before this. But, you know, just going through some of these and kind of looking at the winners I took, you can see they're very kind of clear ranges, much clearer than some of the ones that we were looking at. So, you know, even this one, the break of structure occurred at the top here, the break of structure of this low. And then you ask yourself, what's the highest point that broke that low? It's going to be this one. And so your stop loss would have to be up here, but there isn't really much of a liquidity sweep going on here. So I do think some of these trades could be more likely hindsight is what we're kind of looking at here. Is he could be taking a lot of losses, so he goes back in hindsight and tries to look for examples of winning trades, which can be a good strategy. And that would be another thing I'd recommend outside of the market structure work I talked about, is go onto your chart, ignore FX replay. If you're brand new to the plan and struggling like this, I would ignore FX replay. Go to your live chart, pull up what's it called, trading view right here, and literally just look at past price action, or even look at trades that, number one, you saw me take in my journal. You may have seen in the, some of the course content, we have example trades and stuff. Look for those trades in a live market and get used to seeing those in hindsight. And if you can spot trades in hindsight better, you'll get better at taking them in FX replay before making that jump. Because in some cases, I think being able to look at a chart like this, see a good sweep on liquidity, see a good break of structure to the downside right here, and then marking up your rate, understanding obviously this is a miss, but the general idea is look for setups that worked well, and you'll get better at that pattern recognition, because at the end of the day, that's all trading is, just looking for that pattern recognition. Has your journal been shared somewhere? Well, let me, I think it has, but let's save it and then upload. Let me see. This should be the most updated version. All right, it's in chat now. So yeah, I don't know why it's XLSB, XLXSX, whatever, but yeah, so you can probably go through some of these trades would be my recommendation, and you'll get used to seeing the positions I took more. And I really think the pattern recognition is the main thing that you seem to be faulty with here. So getting used to seeing, obviously, the proper setups that are working and whatnot, you'll see some improvement. And I always just go through hindsight kind of like this and just kind of look at different setups and how they played out. That is going to be all, though. I think I caught up on reviews fully, actually, in this webinar. I did. All right. Any questions for me before I go here? Grab a drink of water, too. My voice is killing me. All right. We have no other questions, then I'll end it off here, and this should be posted usually within 5 to 10 minutes. I have it in the live sessions channel, and I'll see you guys next week. Thank you.